Correspondent banking and de-risking may sound like things that only concern businesses and the banking sector. In reality, the ordinary person stands to be affected when international banks restrict or terminate relationships with those operating in the region. The subject came up for discussion recently during a session hosted by the Barbados International Business Association and the Barbados Chamber of Commerce and Industry. Economist Jeremy Stephen broke down the issue for Nation News.
So because of this belief that we've had a lot of drug trade had passed through the region, human rights abuses, unstable economies, the banks in the United States of America, because of different rules that came into play. I mentioned Basel III and also different rules associated with FATCA, Foreign Accounts Tax Compliance Act, and other little banking acts that came into being over the last 10 years particularly, has required these banks to say, well, look, we can't take on too much risk. So whereas before we might turn a blind eye to suspicious cases, we no longer wish to turn a blind eye. So it's very easy for them to look at smaller banks that don't give them a lot of profitability because we are small compared to the scale of business they do, right? So they will look at these banks down here and say, well, look, you guys are too small considering the risk that you bring to us, and considering that our regulators may challenge us on the relationship that we have with you. So therefore, I think it's unless you try to clean up the way you onboard customers, so bring on new people, you know where they come from, you got a record of their passport, the proof of address is an actual proof of address, all these standard practices, you know about the tax position of the person, so they're not engaged in some black market activity. You following me? So like if you do this, if you're able to do this, then we'll keep you on, which increases the cost of doing business here. So First Caribbean takes longer to onboard customers. Scotiabank would take, in theory, longer to onboard customers, bring customers into the fold, give them bank accounts. I might very well wish to import some stuff, and then one day World Bank can't import it because all of a sudden the customer, the correspondent bank that they had a relationship with, they decided to close the account, so it then freezes up trade as well. So not only does it make it more difficult for me as the average person to get a bank account, but it also makes it more difficult for me, the average person, to facilitate imports via credit cards, for instance. Although that's a little different. It makes it difficult for me to wire money to my family overseas. It makes it a little more difficult for me to wire money to my schools, to pay school fees. It makes it more difficult just for me to do business altogether. Travel regionally. When you buy a ticket on the app, when you buy it off your debit card, a correspondent bank was somewhere in between that transaction. So it makes it more difficult to effectively do business.